Is that whenever we are making we are providing for taxation, we provide taxation with a concept of provision for taxation. Because the reason behind this is, see, we don't have exact amount how much we have to pay tax. Usually we are preparing the financial statements as on 31st December, and we have some period, isn't it? Usually when we say it's a period, we'll say that the period will be somewhere, they'll say it is going to, in some, it depends from country to country, is it right? 30th April, whatever the audited financial results. And in some cases they will give you a time till how many months, till 30th September. Is that, assume this is for 2021. If we are talking about the last year 2021, the audited results will be done by 30th April, and the tax returns can be filed with 30th September. Likewise, you will have this concept. That is the reason we are talking about a provision for taxation. When we say it is a provision for taxation, International Accounting Standard 37 comes into picture. Now what happens whenever we make a provision? We sometimes it happens we make sometimes excess provision. Is that sometimes we make the under provision? Is it right? We are talking in terms of over provision, or we are talking about under provision. When we do the thing, definitely when we reconcile it, is it right? When we are going to reconcile it, definitely what we have to do, we have to make adjustments. Is that whether we have made it high or made it low? Because when we are having a tax returns as such, is it right? Tax returns, it is as per International Accounting Standards. They will give us a margin. Is it right? We can make an adjustments in taxes for the next 4 years. Is it right? For the next 4 years, anything plus, anything minus. In F6 taxation, maybe you have covered this concept. Is it right? 4 years is there. That we have to take into consideration. What is, whether it has been excess or it has been under provision. Now, this is related to what? This is related to exclusively with respect to what? Profit before taxes and taxes. The second aspect, what happens? See, whenever a firm will take, is it right? The firm will have, the company will have, firm have an advantage, okay? The firm will have an advantage of tax deductions, is it right? Tax deduction on what? On non-current assets. Is it non-current assets? Is that they will have the concept? It means they will have the advantage of. Now what they will do on tax deduction on the non-current assets? Whatever the amount of depreciation they are calculating, or during the period, on that depreciation they will get some percentage of tax advantage. Is it right? Some percentage of tax advantage. Is it? This is the reason. There are two aspects here. One side we are talking in terms of over provision or under provision. The second side we are talking in terms of the tax deduction on which type of assets? Exclusively on non-current assets. Is it? No. I am putting very clear. This is the first point. This is the second point. What is the third point? Third point is nothing but we are talking in terms of something with respect to deferred tax. will pay tax, is it right? Will pay deferred tax. Means, see, that's what it says. I told you it is 4 years, is it right? Maybe you need some adjustment. This provision is available for everyone. Is that you are how you are going to you have to evaluate tax every time. What will happen? Every other company wants to make sure that how much tax advantage they will get. Is it right? They want to make use of this option as much as possible. Is it right? As much as possible means we are having three different concepts. One, we are talking about how we have to calculate the tax under provision, over provision. We are talking in terms of the non-current assets, and the next one we are talking in terms of deferred tax. These are the things which we are going to cover in over a period of time. Okay, what we are going to achieve at the end of this lecture, how we have to account for income tax. Is it right? Income tax is a and income tax is not, see now again there are two types of taxes. Is it right? We are talking in terms of you have, I don't know, you have done taxation or not. Is it in terms of what you will have? One, you will have a direct tax and you will have a indirect tax. Direct tax is otherwise called as a income tax. We still in Oman it is not there. Is right? Indirect tax is nothing but a corporate tax. Is that how we have to work it out? Record entries related to income tax. Is that in the accounting? See, tax is what? Tax is a liability. Is it that? Tax is a liability. And all the liabilities, is that all the liabilities will be shown on what? Will be shown on the credit side. If you are paying it off, then you will get the reversal of the entries. Now, this is very important. There will be some temporary differences will be there. Is it? Temporary difference. Temporary differences means definitely either you will pay more tax, you have paid more tax, or you will have less tax. I see with respect to tax authority, what will happen? Our account will be there. Is it right? How much we have to pay tax and how much we have paid tax. Is it right? How much is payable and how much we have paid. Always there will be a difference. Is it right? There will be a difference. That difference is otherwise called as a temporary difference. Is that we have to reconcile it and we have to make account of that. There is no other option for us to escape from this route. Okay, we have to comply with the regulations and it is the part of the system as such. Calculate and refer. What the last one we are talking in terms of deferred tax amount. Yeah, we have to know how much you have paid, how much is payable. Is it right? How much you have paid and how much you have payable. Sometimes what will happen? The government will give us the options. Is it right? See, if there is a new business as such, then the government will give options. You can pay tax after 3 years. You can pay tax after 5 years. Is it right? So, how we have to account it with respect to that type of issues as such. Is it? These are the basic things we are going to cover in this lecture. Fine. Now, what happens? See the thing. What is the basic concept? Income tax states that there are two elements. Is it right? The first element is you are talking in terms of current tax, the amount of tax payable for the period, and the second one is we are talking in terms of deferred tax. Yeah, when we say it's a deferred tax, definitely what we will do, make it up. Now I'm going in detail. Is it right? You will have 2018, 2019, 2020, 2021. Definitely, what will happen? There will be a payable amount, payable tax amount. There will be some paid. Is it right? Now, if it is related to 2018, we have to pay in 2018 only. Is it? In other words, we are talking in terms of what? We are talking in terms of one side we are talking in terms of matching concept, the another side we are talking in terms of an accrual concept. It has been accrued here in 2018, it has to be shown in 2000. It has to be accrued in 2020, it has to show into whichever it is, whichever accounting period has been identified. In that accounting period only we have to make it to. That is the concept of deferred revenue, deferred tax as such. The accounting adjustment aim to match the tax of transactions in the relevant account. The future of what is that? How we are going to have the future of tax on profits? Definitely, it is. What we are doing. It is we are estimating. Is it right? Because we want to make when we estimate. Is it right? See, this is what happens. Is it right? Every time it is going to be like this. Is that what we'll have? We will have profit before taxes. Is it right? We will say that income tax is not, sorry, not income tax. When we say tax, this is nothing but a provision. Is it right? It is nothing but a provision. Now what happens in the additional information? In the additional information they will say, yes, the tax payable. Is it tax payable? This is what this is the amount which going to be identified as for the current period. Is it right? Now what we are doing, we are going to make sure that payable, is it right? When we say it's a payable, automatically it will be identified it as a current liability. And from the profits, what we'll do, from the profits we will deduct the tax provision. So there will be always, it is a continuous process. It is a continuous process of reconciling the taxation account. Is it right? That's what we are talking in terms with. Is that it is estimate that will be eventually paid or received. Sometimes we will pay excess tax, refundable tax refundable will be there. They will tax refund. Is that they will refund the tax if you have paid excess tax in any of the period. Is it right? That this provision, on both sides there is a provision. Is it right? It will, if it is, you are talking in terms of the outstanding tax, it will appear in the current liabilities. If it is we have paid excess tax, it will be appeared on the asset side. But very rare cases there will be a tax refund. To introduce tax liability, you will have tax expenses in the profit and loss account, and it is where we have to show in the current liability. Note that therefore that the balance of the statement of financial position will only be, when we are talking about a balance sheet, is that it only talks about which year tax, it only talks about current year provision. Is it? Now, what happens? This is what it says. Is that how the tax charge will happen? You will have a year. You will have an estimate. You will have something under provision or over provision. Then you are making an estimate. Then you will say how much you have to pay or how much you have to receive. Then definitely, if it is related to which accounting year. Is that if it is related to which accounting? I told you we have to take for the current year only. We should not take into consideration related to the previous year or any other accounting year as such. Is it right? This is the basic simple format of how we are going to identify. You will have the estimates. First you will have the estimate, then you will have the provision. Then subsequently, if there is any adjustments are there for the tax relevant to any of the year, we have to place that amount in that particular year as such. There is this you have. This is little bit going to be tested in the questions. Is right? Any under provision for the year is dealt with. See what happens as simple. What is the under provision or over provision? Over provision is very rare. Is it right? See what happens in the trial balance. Is it right? I will put very clearly in the trial balance. I am writing it as a extract. Okay. Means I'm only focusing on what? I'm focusing on only on the trial balance. In that what happens? You will say tax expenses. Is it right? Tax expenses, what we'll show, we'll say we will show it on the debit side. Next, we will have tax payable. Is it right? Tax payable. Payable is nothing but it is a current liability. We are going to show it on the credit side. Yeah, we are going to show it on the credit. Now, they will give in the additional information. Is it? They will give in the additional information. What they will say? Provide provision for taxation. Is it? Provision for taxation. They will say the provision for taxation is some 5,000. Is it? Means it is not paid. It is going to be payable. It means what happens whenever it is given, you have to show it in the profit and income statement, as well as you have to show it in the statement of financial position. Is that this is what it says? This does not affect the year-end tax liability. All we need to know is whether we have provided less or we have provided more. Is it? If we have provided less, we have to provide additionally. Is it right? If there is under provision, and under provision increase the tax charge, and over provision decrease the tax. Means if you have under provision, you have to what you have to do? You have to provide addition. You have to add. Is it right? If it is an over provision, we have made excess provision. Definitely we have to deduct. Is it? This is the rule which we should keep it in mind whenever we are going to work out with the taxes. Fine. There is under provision. There is a over provision. Fine. Now we are working with we are working with the under provision or over provision. Is it? Now what it says? Simple has estimated its income tax liability. How much they have estimated is how much? They have estimated 180,000. Okay, fine.